live with the mortgage calculator. We're going to check out some live rates like we do every morning, and then we're going to do our deep dive topic for today, which is instant HELOCs. So definitely a cool product, especially right now where a lot of people have equity in their home. So we'll do a deep dive into that later. Feel free to drop a comment there as you're tuning in. We'll wait just a second so we can go live everywhere. I see comments already rolling in. Appreciate it. We'll get started here shortly. You can also drop questions in the chat as we go through here today if you have any questions on Instant HELOCs, which is definitely a cool program. All right. Okay, it looks like we're live on all the different platforms, so we'll go ahead and get started. Keep dropping comments there in the chat, though, and again, drop any questions you have as well. We'll get it started. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and what we do every morning on this show is go through the live mortgage rates for today to see what the market is actually looking like, our real live rates. And then we do a deep dive into a different topic every day. Today's loan topic is going to be instant HELOC. So our sales manager, Jose, with 28 years of experience, is going to take us through a deep dive. But before we do that, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the market is looking like this morning. It's probably pretty interesting.
Yeah, we see a lot of activity in the markets today, and hopefully that will start reflecting in our pricing. Maybe not quite this morning, but hopefully in a little bit. Let me change my screen though, and we will see what it looks like already. So as Kyle mentioned, this is our pricing tool. This will show us the general rates for today. It is February 1st, just after 11 a.m. Eastern. We just had a Fed meeting yesterday, so a lot of activity in the markets that affect mortgage rates. So hopefully we see some downward momentum today and throughout this afternoon. We will be showing the live rates with the APR. If you'd like a full breakdown of all the fees and itemized loan estimate, please get with our team members. We have over 250 licensed loan officers in 23 states. So for our demo, as we do every day, we'll set up a basic scenario to compare across the programs. We'll set a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We'll ask the computer to find the lowest rates we can offer for conforming conventional, and we'll compare that with FHA. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional options. We also have VA and USDA programs. VA is only for eligible vets and active service members. So if you are, just let us know. We'll quote it, no problem. And USDA is only for eligible properties. If you do happen to be looking in those areas, just let us know. We can quote that in a few clicks. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio of 40%. So with these settings, let's see what the rates are doing. All right, we definitely have some downward momentum. I hope this will continue throughout today. But now we're in the fives again. We love to see fives. 5.99. This is the first episode in over a year where we've had fives, right? So everybody's excited. 5.99 conventional for 2.125 discount points. Puts the final APR just over 6.24 there. So great option for our customers looking for conventional. We hope to continue to see those rates go down. Even though the Fed hasn't actually dropped rates, you see the market sentiment is that they will. So we do see the rates go down with the general projections of the market. And you can also watch the 10-year Fed, which pretty much tracks this in real time. Now, if our customer doesn't qualify for conventional for any reason, typically the next option we want to compare is FHA. So we'll set up the same exact scenario. And this time we'll select FHA, which does allow a little more leniency on credit issues and events, as well as a much higher debt to income ratio. However, to compare apples to apples, we'll keep everything exactly the same so we can compare across the programs. So let's check out the FHA options. All right, coming in smoking. FHA dropped down to 5.25 today for 2.375 discount points at cost. That puts the final APR at 6.17, which is actually, you saw, a touch lower than conventional there. So For those that qualify for both conventional and FHA, definitely don't overlook FHA. Today it reacted a little bit quicker than the conventional, and we will continue to hopefully see both of these programs drop today in real time. Now remember, this APR does include the upfront and yearly mortgage insurance, so this is the final number to compare apples to apples across the programs. So again, if our customer needs FHA, great option, and if our customer qualifies for both, definitely do not overlook the FHA. Now, where we love to specialize is if our customer, for any reason, doesn't qualify for either FHA or conventional. Many other banks or lenders, unfortunately, have to deny that customer, but that's where we love to present our 5,000 plus additional options here under expanded guidelines. So for the final demo here, we'll select expanded. Everything will stay the same. However, we have a new option pop up, which is our income verification. So full doc is what we use for conventional and FHA. That means 2 years of tax returns. That's what most people are used to. So we'll typically choose a non-QM program to use an alternative. We have asset-related programs, business bank statement programs. The investor programs are just for investments. We'll show that in a minute. Personal bank statement 12-month is what we use for the demo. That's the most popular program. We also have RSU, stated income, VOE, 1099, P&L, and no income CDFI, all kinds of different options. For the demo, we'll select 12-month bank statement. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit tax returns, may have various write-offs and may not qualify at all, or just may need a little bit of extra income. Either way, we can solve that problem. No tax returns at all, just their last 12 bank statements. And we will determine a debt-to-income ratio of 40% in our example here, using no tax returns at all, just their cash in the bank statements. So many of our self-employed borrowers qualify for much more income using these methods. So let's check out the non-QM rates this morning. All right, we got some downward momentum, but non-QM typically reacts about a week later than conventional. So later this week, maybe tomorrow, maybe Monday, we should see a lot of new rate sheets for non-QM. Looks like not all of them have updated yet, but we did see some downward momentum here as we have a 6.875 program for 2.225 discount points in cost. That puts the final APR at 7.261. So you see we're about 1 point above conventional here using bank statements. So great option for our customers that need to use it. It's very comparable to conventional, and we should see these rates drop pretty dramatically here in the next week. It usually takes a few days after the conventional rates start dropping for these to really start moving. And if we scroll down, there's hundreds of different options. Again, some of these probably haven't repriced yet, but they will soon. And some of these options may allow different ways to calculate the income and may allow us to have different credit events, bankruptcies, foreclosures, and other issues that would cause us to not qualify for an FHA or conventional program. So tons of flexibility here, hundreds of options. Please get with our team to find the best ones for you. And before we go into Jose's example, we always do some live pricing for investors. So we'll switch this up to investment property. We love to work with investors, seasoned investors, first-time investors. We have great options for any. So we'll set up the LTV to 80% loan again. And we'll ask the computer to find the lowest rate for conforming conventional programs for investments. And we'll compare that with our non-QM options. Remember, the government programs, FHA, VA, USDA, do not work for investments. So we'll just compare these top two here. We'll start with conforming conventional. Everything's going to stay the same as all our other demos. The only thing we've changed here is the occupancy to investment. So let's check out the conventional investment rates today and some good downward momentum. We love to see that again. And before, remember, the portfolio the last couple of days was up top, but as you see, the portfolio doesn't change and conventional changes instantly when the markets change. So you see here, Freddie Mac back on top option with a 6.624 rate for 3.25 discount points in cost. Puts the final APR just a touch above 7 at 7.005. So downward momentum on both the investments and primaries here for conventional, which we love to see. Now, I'd recommend all of our customers also compare a non-QM option. So for our final demo, we'll set up the same scenario. And this time we will select a expanded guideline option, also known as non-QM. So the first thing we need to select for non-QM is our income type. So the most popular income type for an investment property and our most popular loan here at the Mortgage Calculator is our DSCR loan. Because it doesn't require any income or employment or documentation on that from our borrowers, we simply use the estimated rental income from the property to determine a DSCR, stands for debt service coverage ratio. The estimated rents can cover the expenses, the PITIA of the mortgage, aka the property cash flows. That's a ratio of 1 or higher. We even have options for ratios under 1 as well, where the property doesn't cash flow. But for the demo, I'll put 1.5 so we can see all the different programs pop up. And finally, a prepayment penalty must be selected for a non-QM investment. 3 years is standard for these programs. That's what we'll use for the demo. We can select 0 prepayment. That will cost more and limit the programs that show up. We could also select 5 years, which will save our customers some money that want to hold the properties, but does limit the programs. 3 years is most common, so we can see all the programs pop up. So let's check out the DSCR options today. Ooh, couple options in the 6s, so a couple of these have repriced already. I expect to see a lot of these reprice here again within the next couple of days. But amazing option here, lowest option we've ever shown on the show, I believe. 6.75 rate for a DSCR, absolutely amazing. For 3.275 discount points and cost, puts the final APR at 7.242. So you see there we're within 0.2 of conventional here. So I'd say about 100%, maybe 99% of investors. If there's a difference of 0.2, even if there's a difference of a couple points, typically choose DSCR. So when it's almost identical price like it is today, I'd say about 100% of investors will choose that when they see it side-by-side comparison. No income, no employment documentation. You can do 1, 2, 5, 10, 20 DSCR loans at a time and cash out multiple properties, purchase multiple properties. A lot of flexibility here, close in LLCs, all that great stuff. And if we scroll down, you see there's dozens of different options. Some of these may allow bankruptcies, foreclosures, other credit issues. Some of these may allow different ways to calculate the income. Short-term rental income is a very popular request with these programs. So please get with our team. There's hundreds of different variations here within the DSCR world. And now let me switch my screen up and we'll get into today's topic. Definitely not a DSCR, but a very cool product and very popular now. Fortunately, the rates are going down as we just saw. However, HELOCs are still very popular as the rates are higher than they have been traditionally, right? So second mortgages, HELOCs, always very popular topics on our show today. And we have some very cool instant HELOC options. So this is a subset of the HELOC. So we've done a couple shows on HELOCs, done a couple shows on fixed rate second mortgages or HE loans. This is a little bit different. This is our instant HELOC option. So typically an instant HELOC means it's going to be all automated with an automated AVM valuation method, aka no appraisal, but there is obviously a valuation done, but it's usually automated. And it's an all online process. So it's typically a non-underwriting process. We'll typically have to have our basically our instant VOI or VOE done where we connect, right? A lot of people have seen those different ways where you can connect your bank account. It will go in there, make sure your W-2 deposits are where they're supposed to be, your bank account balances are where they're supposed to be, and we can instantly generate an offer using those instant parameters. So that's what we mean by instant HELOC. It means that the underwriting, the appraisal process happens instantly. Now, the caveat here, as Jose will probably tell you, it doesn't always work, right? Sometimes the AVM model doesn't have your property in there. Some states are tricky. Some properties are tricky. Obviously, multi-unit properties are nearly impossible to do an instant valuation on. So doesn't always work, but when it does, these are the quickest, easiest ways for our customers to get funds. And it does even work for investment properties and second homes as well. So cool options here for instant HELOC. We even have non-instant HELOCs that go a little bit further where they're AVM HELOCs, and then there's regular HELOCs. So this is the quickest version, this end of the spectrum. We have a few other options as well. So hopefully that prefaces it there for you, Jose. But if you're ready, let's check out the actual rates. So you ready, Jose? Is he frozen?
He was frozen, I think, for a minute.
Coming back.
Come back. Hold up. Let me share my screen again.
Oh, there you go.
All right. Can you all hear me?
I think you're good now. Yep.
All right. Great. Awesome. Sorry about that. Too much going on here and freaked up my system. All right. So let me get into add a little bit more detail about this great product that we have. Now, this is obviously this is a speed product, and this is a simplification product, right? I mean, the days of having to wait 30 or 45 days for some quick cash are a thing of the past when you come to the mortgage calculator, and we can offer you our instant HELOC. I think we can close this in what, 5 to 7 days, something like that, because
Well,
it
if it's an
uses
investment property, even less. So yeah.
it uses an AVM, right? Which is basically an instant appraisal. It's not a desktop appraisal, which actually could take 24 hours, right? We tend to call those a CDA in the industry, right? This is an AVM, right? This you could go and pull the AVM in 5 seconds. It's going to give you the result. Right. Now, they also have a great option that if the AVM does not work out, they actually let you then use a BPO, which is a more detailed approach, right? That's more of a desktop type appraisal. Um, there is, so in both cases, it's less time than an appraisal. No worries about having a physical inspection of the property, right? That can sometimes be a concern. Uh, Savings, right? The AVM is a lot less expensive, and a BPO is a lot less expensive than an appraisal. Limited title review, right? It's not like a full blown title insurance policy with all of the associated expenses that title insurance policies can have. I mean, they will review title, but they have their own internal automated ways of doing it. This is all a streamlined process. So you have additional savings there of time and money, right? So simplified valuation process, simplified review process of title, and simplified review of the income as well. This is technically a full doc program, but it is a very streamlined way of doing it. That's why we call it the instant HELOC. And on top of that, the rates and the options are awesome as well. Now, we do have maximum 85% CLTV on an owner occupied property, and that would be with a minimum of 740 or above credit to get to the maximum 85% LTV. I showed the 760 plus option is the one that I have as the 85 because that shows the best rate. At 760 and up, the rate does not change. Um, if your score drops, and this is for owner occupied, if your score drops to 739, you can go 80%. And actually, 75% is 640 to 659, and 65% is 620 to 639. So you have different CLTV options there, depending on the score. Maximum loan amount at the highest credit score is 250, and the loan amount does drop. Maximum loan amount does drop to 125,000 when the score is 659 or below. Right. And for investment, we do offer the HELOCs for investment, the instant HELOC for investment. Now, that is amazing, as you all know, because HELOCs tend to be restricted for investment properties. We can go up to 70% CLTV across the board from a 680 to above credit score. Now, the loan amount, 680 to 719, maximum is 200. 720 to 759, maximum is 225, and 760 plus, maximum is 250. But all across the board, it's 70% maximum CLTV on your investment properties. So let me share some options here with you today. So our first quote here is for a 760 plus credit at our maximum 85% CLTV. Now, I am pricing these out at 1.99 points in loan discount. There is a 0.99 option, which increases the rate by 0.3. And then there's a 0 point option, which increases the rate a little bit more. But let's go here in what we're looking at. Our rate here 10.65, and this is for, like I mentioned, 85% CLTV with a 760 plus credit score. So if you have been pricing HELOCs out there, you will know that 10.65 is very competitive. It's lower than a lot of the options I've seen out there that are full-fledged review, right? Oh, and one very interesting point about this product, right? This is, can't forget to mention this because this is really cool here now. This option does have a fixed rate per withdrawal, right? So if your initial disbursement at closing is, let's say, 80 grand or 90 grand, right? But you applied for a $250,000 HELOC, but you only want 100, right? That 100 is going to be set fixed at, in this case, 10.65%. Our HELOC is for 250. We drew 100 at closing. That draw will be set forever at 10.65%. And then when you go to do your next draw, it's going to be at whatever rate is available at that time. And since we are looking, hopefully, from the trend we're seeing here, decreasing rates, so that's a very positive thing, right? Draw what you need now, pay just on that amount. That's the benefit of the HELOC. It is an open-ended loan product, so you only pay interest on what you owe. That's why it's awesome to have it, but make sure that you have an accelerated repayment plan and you're just not looking to pay interest only for the draw period, and then at the end of the draw period, it becomes a fully amortizing 20-year loan, which could be a much higher payment, right? So our first example here is at the maximum credit. Our next example here is at 700 credit. I wanted to put it at the different plateau at which it becomes 80%. And you do see, obviously, we do give you great benefit for the higher scores, but as the score drops, if you want to maintain the maximum CLTV, which in this case is 80%, you are going to be looking at 14.85% rate with the same 1.99 points. If you want to decrease that point cost by 1, then your rate would be 0.3 higher, would be 15.15 for this example. And then I wanted to show you here an example at 620 to 639. Now, 620 is the minimum credit score for this primary HELOC option, and 65% CLTV, and we're looking at 14.9%. So the rate didn't really increase much over the one with the higher score, but obviously we had a decrease of 15% in the CLTV. So we're looking at 14.9 with the same 1.99 points. And if you want to, pay, or the customer wants to save that 1 point and only pay 0.99 points, then you would be looking at 15.2% for this same option. And then I wanted to give you a couple of investment property options because this is so exciting. We have a lot of investors out there who want to keep investing. They have their properties that in the last 3.5 years could have doubled in value, and they're looking for ways to tap into their equity, but not wanting a long-term type loan where it's going to be, fixed and a fixed payment in 30 years. And, they can't pay it down and reduce their interest, especially if they're an investor that has a lot of capital inflows and outflows. There's a good probability that this HELOC is going to get, it's going to have a lot of movement, right? A lot of up with the balance and then pay it down, up with the balance, pay down every time they do an investment. Then when they cash in an investment, they're going to come back and pay the balance down so that they reduce their interest expense. That is the main benefit of a HELOC, right? Because it's a variable rate. So that's negative that it's a variable rate, but that's also positive because it's an open-ended mortgage that you only pay on what you owe. And if you have an accelerated repayment plan, then you're definitely going to save money with a HELOC, even if it's a higher rate, because again, you pay on what you owe. So in this case, you're looking at 10.35% with that 1.99 cost, which is pretty amazing at a 70% CLTV. And again, if the customer wants to drop the points to 0.99, your rate would be 10.65 for an investment second lien option. Oh, and I did forget to mention on the primary, we do offer a third lien option. Now, there is an LTV reduction when there's a third lien. I cannot recall what it is right now. It may be 10%. Don't quote me on that, but I think that's probably the LTV reduction. But we can do a third lien on a primary. Can't do a third lien on an investment. First and second liens only, but on a primary, third lien. So if somebody has a nice first that they have, and for whatever reason they have another second mortgage that's fixed at a low rate that they don't want to touch either, well, we can offer them a third mortgage, right? You don't hear that too often, third mortgage, but we can do it. So this one here, amazing for our investment property, 10.35%. Wow. And maximum loan amount, again, like I mentioned on this scenario here, with the maximum credit score, maximum loan amount would be $250,000. In this case, we're only going $137,500. And in our last example, I wanted to show you then what is the impact if we go to the minimum credit score possible for an investment HELOC with this Instant HELOC program. It's 680. So 680 to 699. The good news is 70% CLTV is still possible. So there is not a CLTV reduction because you're at the lowest credit score, but there is obviously an increase in the rate, right? We go from 10.35 to 14.05, a little bit higher, but still remember what we're dealing with here, right? Instant HELOC, minimal fees for the loan. I mean, very minimal fees for the loan because you don't have an appraisal fee, you don't have title fee, right? They go to you and close it with a notary. Very minimal fees, and we can close it in 5, 6, 7 days. And a lot of times, especially for the investor, time is of the essence. They saw that deal. Maybe it's a cash only type property that they're gonna do a rehab on, but they don't have time to wait to close for 2 to 3 weeks for the fixed flip loan to close. So we do the instant HELOC, put the money in their pocket, and then they can buy it, and then we can refinance that property that they just bought cash via a delayed finance fixed flip loan. If you recall last night's lesson, right? The fixed flip loans. And then once they're done with the rehab, then we transition them, if they're going to hold the property, into a DSCR if we're looking for a 0-month seasoning option that's only going to use the rental income generated by the property to qualify, which is every investor's dream because they love their properties. Properties are good. Properties generate cash flow. And they always used to ask us in the past, I have all these great properties and all this great equity and all this great credit. Why can't you use that? Well, at the Mortgage Calculator, we can do it. So we look forward to helping you structure all your instant HELOCs and all your investor deals and your primary and everything else under the sun.
All right, we got a couple questions. Easy's asking, since these are variable when we calculate the blended, these examples were not variable, as Jose mentioned. These are kind of a mix, right? Jose, can you explain how these work, please?
Right. That's the beauty. And that is a great question. And that is a great way to additionally use this tool, right? Because you can do that. You're going to get a fixed rate on your draw. So in this example, we had a $250,000 HELOC, right, on our primary, 760 credit. The borrower decided at closing, I'm only going to draw 100,000. Okay, you draw 100,000, and that 100,000 is going to be at the 10.65% rate. That was the rate. So that rate is fixed. Now the next draw is going to be at whatever is the rate at that moment, right? The rates update, I think, like once every 2 weeks. So it's not like something that is, updating every day on this product. So yes, you could definitely then use the blended rate, where, to remind everybody what that is you're going to assign the proportionate share of the loan to each, of the rate to each loan, of the interest expense to each loan amount. So if they have a first mortgage at $300,000, right, at 5%, that would be what, $15,000 in interest a year, and then they have the second mortgage at, let's say 10%, to make a nice easy number, 100,000. That's 10,000, right? You add them up, you add the loan amount, and do your division, and that gives you the blended rate of the two loan amounts. Each there's a proportionate share of the loan assigned to each interest expense. So yeah, you would definitely be able to add a lot of value as a consultant in this transaction with this fixed rate hybrid HELOC product, to be able to use a blended rate scenario, which you cannot use on a regular HELOC that is a fully fluctuating rate on the full loan amount. So thank you, because that is an amazing question and an amazing way to further use the instant HELOC to blow the minds of the investors and the primary and second homeowners out there.
Beautiful. And Jackie is asking about the third place. Is there subordination concerns? So these are all, obviously, we're offering them. So they already have that all figured out. As Jose said, they do check the title. So they will check if there's, concerns or liens or something like that. You have anything else to add to that, Jose?
Yeah, I mean, like you mentioned, this is, they're employing a lot of technology, right? The only person, let's say, the only entity that would be concerned about subordination is going to be the company that's issuing the new loan, right? So they know they're going to come in third position. They're not going to usurp the second or the first. If you had to be reaching out to get subordination agreements signed by a first and a second, we wouldn't be able to call it an instant HELOC, because they wouldn't be able to close it in 5, 6, 7 days, because that could take weeks to get some loan servicer to sign off on a subordination agreement or anything like that.
All right, and great question from Kawani. Are there any state restrictions or states that's not offered? So remember, we're licensed in 23 states, so we can only offer it in those. And there is a restriction in Texas. Texas is one of the weirdest states in America, especially with home equity, and especially over 80% doesn't exist, unfortunately, in Texas due to some specific laws. Most of you on the call probably know some of those laws. So you're exactly right, Kawani, and I know you're from Texas, I believe. So you hit the nail on the head there. There is restrictions, but we have 23 states, so that means 22 we can offer the instant HELOC in there for our team. Anything else to add, Jose?
Nope. That's it. That's what I was going to say.
All right, looks like that's it, right? I don't see any other ones. All right, cool. Well, that was great. Absolutely awesome. And one of the easiest ways to get money as a borrower, and one of the easiest loans you'll ever do as a loan officer as well. So great product to educate yourself on. So thank you, everybody, for tuning in. Remember, we do this 11 a.m. Eastern every weekday, where we go through the live rates, and then we do a deep dive into a different topic. So we'll have a new topic tomorrow. We appreciate everybody tuning in. Thank you, Jose. Great presentation. We'll see you all tomorrow, 11 a.m. Eastern, on the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.